Money Monday, and in honor of Labor Day, we are talking about letting your money work for you. Today, we are talking about the ways that you can invest even if it makes you feel a little uneasy or uncomfortable. Certified Financial Planner Joe Bert joins me this morning. Good morning.
Morning,
Happy
Lou.
Labor Day.
Thank you.
You know, a lot of people are leery about investing. They say, I saw the market crash, all those people lost money. Why do you tell people they should invest?
Because you have to get your money to grow, and the only way you're going to get your money to grow is to invest. Invest in something. You know, you have a lot of choices. You can invest in the stock market. The best way to do that, as I say, is through mutual funds. You can invest in real estate. You can invest in tangible assets. You can't afford to let your money die in a savings account.
You can pick, right, if you want to invest safely or aggressively or somewhere in between.
That's correct. And the best way to do that for most people that are working is use your 401k. If you don't have a 401k, at least use an IRA. Get your money working. But your question was saving versus investing. Saving is for the immediate needs that you need to, you know, heaven forbid you lose your job, emergency money. Investing is really should be considered for the rest of your life. And investing, you know, time is a great asset. It'll what I'd like to say is it'll leach the volatility out of your portfolio. Unfortunately, we get emotionally attached and we make emotional decisions, and I'm not going to do that, and I let it sit in cash, and you look back 10, 15, 20 years and you really realize how much money you've lost by not investing.
Yeah, because investing, actually you get a better return. Describe for us why, you know, what investing does, and then, because you do get a little bit back in savings, right, but more if you invest?
Back in the day, they used to say cash is king. Today, trash is cash. Cash is trash.
Cash is trash. Why is that?
Because it's just not growing. You know, put your money in a savings account today, you're going to earn 0.5%. Back in the day, they used to give you a toaster when you went to the, you know.
Now you get nothing.
No, now you have to give them back the toaster.
Oh, gosh.
That's how bad it's getting.
And how much can you get if you invest? Give us some idea there.
Well, long-term, I would like to say a long-term return on the market using the S&P 500 is 8 to 10% long-term. But it's not a straight line. And people think, oh, you know, 8 to 10, that's great. I'm going to put it in. And the first time it goes down, what happened to my 8%? You got to think long-term. And that's why we say investing is for the long-term. Now, you can't put all of your money in investing. You got to have some money for emergency purposes, because you don't want to cash out when things are down.
That's what I was going to ask you. So how much do we need in savings in case of an emergency?
Well, the general rule of thumb is anywhere between 3 and 6 months of your living expenses set aside. But, you know, you can always borrow from your 401k if you need to, but what you don't want to do, heaven forbid, is use one of those payday loans or start putting it on a credit card. That's why you want to have money set aside. Once you have that set aside, then start your investing program.
And how much should we be investing percentage-wise of our income?
At least 10%.
At least 10.
Yep.
Okay. I need to give mine a little bump, I think.
There you go.
Joe Bert, how can people get in touch with you?
Just Google me, 2 words, Joe Bert, B-E-R-T.
All right. Thanks for coming in.
Good to see you.
Appreciate it.
Thanks.
Ryan, over